Good day, YouTube. This is Jay Money with Falling Forward Financial. Just a article here. I wanted to point out about 3 different REITs. I've talked about all of them here on the channel a couple times. Dividend cuts could be right around the corner for these 3 REITs. A little bit older article, but still relevant. As you can see, ORC, OPI, I don't think I've talked about it, so I take that back, and I just did one on New York, but ORC is a finance company that acquires, invests in, and offers financing from U.S. residential mortgage-backed securities. Florida Mortgage Real Estate Investment Trust, or REIT, initiated an IPO in March of 2013. Price of $14.50, monthly dividend of 0.135. So very nice dividend, returned an approximate annual yield of 11%. However, in the past few years, the stock price has floundered. ORC has reduced its dividend payment several times. Orchid price has recently been below $3, and a dividend of 0.045. It was, I think, 6 or 6.5 cents when I first got into this one, per month on an annualized basic yield of 18%. So currently at 0.045. There is breaking news. The company this week, Orchid, announced a 1-for-5 reverse split. So the stock opening this morning is at $13.60, and it's actually down from there. Reversed stock splits are often seen negative by Wall Street and are sometimes a desperate move by a troubled company trying to avoid a delisting simply to pump up its image. I just did a video earlier on NLY Capital, and they're basically going through the same thing. I believe they're going to do a 4-for-1 or a 1-for-4. So basically, on ORC you get 1 share per 5, and on NLA Capital and ticker NLY you get 1 per 4. So with the reverse split, Orchid announced a monthly dividend of 16 cents per share when adjusted for the split. Equates to around a 29% reduction, which might not be the end of the company's dividend cuts for the year. New York Mortgage Capital, or Mortgage Trust, I just did a video on this one, is another REIT with a similar business model. Has dropped from $5. I used to buy this one at $5 before the pandemic, and to less than $1. It has struggled to return the pre-pandemic levels ever since it opened at $2.84 today. Declining revenue and negative earnings per share have contributed to the declining share price. Additionally, has missed analyst estimates for the last 4 quarters. New York Mortgage Trust dividend is still 40 cents per share, or over 14% annually, but the dividend is only half of its 2019 amount. Unless things turn around quickly, it could be cut in half again in the near future. Next one is OPI, Office Properties Income Trust. I don't think I've ever looked at this one. OPI is a Massachusetts-based real estate company that owns, leases, and manages office space. Many of its tenants are stable, and the portfolio includes government offices. Yet OPI stock has fallen from $48 in September of 2018 to $18 today. Declining revenue since 2019 and more recently negative earnings per share are probable factors behind the price loss. But another major reason was a quarterly dividend cut in January 2019 from $1.72 to 55 cents. So that's quite a cut there. Especially if you're retired and trying to live off of that dividend, that would be a major cut. OPI continues to pay the 55 cent per quarter, or $2.20 annually. So that was probably 6 or something. You'd have to figure that out, but I'm not going to take the time to do it. Yielding over 12%. However, in volatile markets such as 2022, investors more than ever want to see increased revenue and earnings per share, so they shun stocks like OPI, even with attractive dividend yields. So looking to the future, OPI seems to be another REIT that may have to cut the current dividend unless it can turn around declining revenue and earnings per share around. So just wanted to point out those three. I've talked about ORC in New York here a couple times, ORC quite a few different times, and that's going to suck and piss a lot of people off if they do cut their dividend. I wouldn't be at all surprised, but if there's any other dividends out there you feel that are in the REIT category that you feel that are better than these, you can list that in the comments along with your the ticker and any information that you might have on those. Of course, there's other dividend stocks, tons of dividend stocks, but I'm specifically talking about REITs, the high-paying ones, so which they are risky, and sometimes, as you can see, they do cut their dividends. But that is it for this one. Again, I don't give tax, legal, or trading advice. It's up to you, whatever you want to do with these three: buy, sell, hold, whatever you want to do. I don't get into that. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.